got a bunch of questions that were submitted beforehand. We're going to take a look at those and any other questions that you all have, either about today's trade or with respect to profiling or just trading in general. This time is really just for you and to help this be as fruitful as possible. And we're gonna make use of the time as everyone. Let me send a note out to some people. All right. Well, welcome to one of our live profiling Q&A sessions. We do these frequently. Try to do one at least once a week. Sometimes we do them, often we do them on Fridays in the morning. Trying to change the time around just because I know certain people can be available in the morning, some people can't, and so just trying to give opportunity for everybody to get a chance to join us. But always mindful that risk, how much we're risking when putting on trade, is about all we can control in markets. Everything else is rather subjective. The thing that we can have absolute and objective perspective on is risk, and we take that very seriously. A little bit of background on myself. I'm Josh Schuler. I'm the founder of Trade Profile. This whole endeavor really came out of my own journey as a trader and just not finding, having to look all over the place to find process toward being developed. And I wanted it to be my career. I wanted to be trading full time. I know lots of people have other reasons that they want to be in markets. But ultimately, what we've developed is something called our Profile Trading Development Pathway. So, I may reference modules or concepts or principles today. A lot of that's coming from our development pathway, which is built for traders who are looking for consistency. If you ever come to the market, you're like, how do I find an idea? How can I generate an idea every day? How can I, quote unquote, have the market come to me? How can I have confidence that what I'm going to do is actually going to have positive expectancy? That is it really is the aim for most traders, and it's what we try to instill based around 3 objective focus areas. So these are great ones for you to test and see where you line up on these. One is the 4 behaviors observable in every auction and how to observe them. And they're really like 4 real behaviors that auctions display. There are moves, like a beginning. There's a beginning of price discovery. There is a rest, period where we're kind of accepting that and taking a breather. Then there's a test. That's kind of a test for another direction, and then there's another direction. Like that's it. I mean, that. So any point we're kind of looking at where those behaviors are on what time frame. Are you looking at a 1-minute chart, 3-minute chart, 5-minute chart, hour chart, daily chart? It's one of the things that's amazing about markets is that these things exhibit in multiple time frames. 4 questions to ask before entering a trade. What's the opportunity? So why am I interested in this trade? What has got me interested in this trade? What am I willing to risk for this trade? That's the second question. What would tell me that I'm right? And what would tell me that I'm wrong? Those are the 4 questions. We ask and answer those questions before we ever put a trade on. You want to make your consistency go up immediately, work through this process. And then finally, the 4 stages of auction competency and how to know which one you're in. Is your approach mechanical? Do you have to think it? Do you have like checklists you got to do it? Or can you kind of breathe and have all of that intuited? If you're at stage 3 competency, that's like a conscious competence, then you likely have a system that you can trust, works, but it's just not instinctive yet. Whereas if you can kind of look and intuit, that's more of a stage 4. It's an unconscious competence. So with that, we're going to just dive straight into a little bit of today, prepping for tomorrow, and then going through some questions that have been submitted, and hopefully have some fun along the way. So I'm going to just kind of get back over here to my charts and see how we're finishing here. So we've got NASDAQ futures on the left, ES futures on the right. We're looking at a platform called Window Trader. So in case anybody ever asks, they always ask about the platform. It's called Window Trader. Just a fantastic tool. And one of the questions that we had often is around like, what is the profile? How does it work? What is a profile? What is it showing me exactly? And how do I see that? And really, if you're going to make trading decisions, if you're going to make better trading decisions, what you're trying to do is you're trying to see and make decisions on things that every other market participant can see. So that means, you know, Joe Blow retail trader that is in Idaho to, you know, Deutsche Bank, Credit Suisse, you know, on Wall Street, you know, placing trades. Like, you want to be able to look at the same, make decisions off the same stuff. So when you think about indicators and you think about all these things that people put on their charts to make decisions, well, I mean, those are only helpful if other participants are making those decisions. And what we find that every single participant, it doesn't matter your scale, your capital size, whatever, is looking at, is they're looking at price and volume. And so all that we're looking at here on these two charts is arrangements of price and volume in different ways that we see that. And so let's just look at the ES here, for example. I can kind of walk you through this so that you know exactly what I'm looking at here and why I'm interested in that. So first of all, the classic market profile graphic that everybody, you know, asks what that is this graphic here on the right, this weird graphic that has letters represented. These are 30-minute periods, and these are the range of prices traded during that 30-minute period. These are called TPOs, or time price opportunities, meaning that, you know, for that period of time, that was the price, and it represents opportunity. The coloring, so the magenta is showing you the high volume trade. So I have it set, you know, we can see the settings here. Market profile settings. Here we go. I have it set to display. Still not showing me the right. Where's my, yeah, here we go. I have this set to show me the top, the deepest color is the top 30% of volume, and the medium is the top, you know, next 20% of volume. So I can clearly see where the intensity of volume is and what's the low. So if it's white, then that's showing you that's the, you know, the lowest 50% of volume for the day. This line here is halfway back, so that's basically a 50% retrace throughout the session. This is showing you all of the how many contracts traded at every price. The highlighted A, B, M, N, that's the volume point of control. So that's showing you where that point of control was at, you know, each period of the day. And so it really never moved. It always stayed up here, even though the day progressed. So that's part of the reason people go, well, why did we rally back? Well, they were never successful at migrating value lower, is what led to a potential pullback. Because price, you know, one of the things we're always asking is price going to value or value following price? In this case, price was leading lower earlier, but could not get away from current value off the open, returns back to value. This number down here is what we call the cumulative delta. So that's the volume between trades placed on the bid versus the ask. In this data feed, a negative number represents positive delta. So that means that they were lifting the offer more than hitting the bid. This is just showing me the intensity of volume per that 30-minute period. And this is a 30-minute period broken out with the contract volume, and this is the top 20% for each 30-minute period with its cumulative delta. So I am trying to see, you know, how, not just how many contracts, but are those contracts primarily buyers or sellers? What's going on there? That helps me kind of see behavior around the prices. And what else? I do have the split between the overnight trade. So this is the Globex profile, and then the US session. Down here are statistics that actually show me, you know, how are we doing relative to the last month in terms of, you know, volume at each period, range at each period, to let me know, you know, is it exceptional trade or so forth. And then each of these levels here, what I call decision levels, that I set for the coming session after the current session is closed. And those are areas that I intend to, look at and make a decision in the subsequent auction. Doesn't mean that I place a trade there. It just means that's an area that I've identified and want to be active at. So we'll kind of go through my process of finding levels I'm interested in tomorrow, in some of these markets here in just a second. And those will be part of the plan for tomorrow. And that is that. What's kind of great about this platform is if I'm not specifically, a lot of time I'm just looking at the developing profile. Now this also has a open, high, low, close bar for the actual full session. And then this dashed line here is the VWAP, the volume weighted average price for that current session. So it gives you a little bit of an idea of where we are. Over here on the right, this histogram is the composite volume of, typically I use about a week. So, if you count back 1, 2, 3, 4, 5, 6, 7 sessions, or five sessions, 7 calendar days, that typically represents what that composite looks like. And now you can kind of get a view of, okay, now if we're looking at the last week or so, this is the most prominent area, and we would call that near-term value. So there's value for the current day, there's value for like the last week, there's value for the last month, and 9 months and so forth. So at least relative to the last week, we're trading above value. And so that can immediately start helping you and thinking, okay, well, how do I want to position myself? I'm trading above value for the week. Do I want to buy that? Maybe. What's my premise? What am I looking for? Because typically we try not to buy above value. We try to buy at value or below. We try to sell at value or above, because that's where we can find unfair prices and have some nice opportunity. And very good. All right, so that's just a little bit of a overview there. To that end, today ES gapped higher on the open. So let's just kind of talk about how the day evolved. We had a gap higher. This is what I call a tier 3 gap, and there's 3 tiers of gaps. Tier 3 is the largest gap. Basically, what that means is that the product is set to open at its expected move for the day. So let me get over here, look at my quick sheet here. Pull this over. So ES right now is expecting about 27 points. I can't really zoom in on that, can I? Just have to, but 27 points, 28 points a day. And, we came in from the 29.36 up to the 29.60. We exceeded that. So that's a tier 3 gap. Actually, very, very low chance that we'll close that. So the fact that we closed today typically tells you that there's something else at work. In fact, that was, I think, just some jitters around the Iran stuff. This is a really dynamic markets in that we had FOMC yesterday, we've got Iran conflict, we have China trade next week. Like I read an article that potentially now Europe is going to be in the crosshairs with them easing or talking about easing. This is just a very dynamic marketplace, and so what ends up happening is that these were 2 levels from the prior auction, like in the historical auction that I was, based on yesterday, those were upside targets. Okay, places I would look for to make decisions. Well, we gapped above them. We opened above them. So then those become potential, levels to test on the way down. And I want to show you just how these things behaved, because I think this can be insightful. is notice as we came down to that first one, how we just kind of pause, and then they break, and then we came down to the second one and pause. So this is pretty consistent and typical auction behavior, where you come back to an area of prior auction, and the auction holds. It was a place to look for potential responsive longs. We just did not get the buyers that we were looking for, and what was happening is they just kept hitting the bid. So even though we were getting little pops here, but then they would roll and pop again. But it wasn't until later in the day, after they had closed the gap, which that's not actually a bullish thing. That's a bearish perspective. And then we have some tweets, and market rallies. It comes back before it makes a run back towards value. So you can see how we interacted with these. So when we gap above them, then they just become potential opportunities to make a decision on the way down. It could be that you were short early, and then you're looking, as those is a place to take it off. I did take a quick responsive short early in the NASDAQ. We had the 7760, and so that was an easy target. So you'll see similar behavior here in the NASDAQ as it took. Let me turn off the 30-minute here. Okay, so same deal. The 7760. See how we just pause here? So that's the auction behaving as the auction should, which is really helpful, because even in a dynamic marketplace like this, it's still really effective. And then when we couldn't hold that, then that was really when you start going, man, maybe we're going to close this gap, which is pretty remarkable. I would not have looked to be long unless we had gotten down. I was actually looking at the 7700, this composite node right here, which you can see we didn't get there. We got within 6 points before they bounced. I would have been interested, in if we could have tested this area here for potential longs, and didn't get there. So aside from quick open rebalancing shorts, there was nothing else to do. And those shorts were more scalps. They weren't really. I typically like to look for types of intraday swings that I can be in the trade for 15, 20 minutes or something like that. And they went pretty fast. But that is the auction working as the auction does. So I don't want to look at. We'll look at one other market, because I know, just kind of looking at people who had submitted questions, products that people were looking at. ES, NASDAQ, crude is the other one. So let's look at crude oil, and then we're going to look at gold real quick, and then we'll start going after some specific questions. Okay, so for one, crude had been in a bounce, basically a bounce we call a bracketed trade, from a balanced bracketed trade really from 51 to 54, 5-ish, 54 and a half-ish, very balanced auction. We broke from that on the day before EIA. We had EIA, and then now you can see, this is the real ramp. Moves begin from balance, and that certainly held. Let me update the composite here. Right, so here's kind of the scene from where we emanated, this 52.20. And then we're off to the races, and now we're cleaning stuff up. So one, we got into a gap zone that was from prior auction. This is also one of the things that told you early that it was impulsive. One was the gap. This is also what we call a tier 3 gap. Crude was expecting about $1.30. We opened a $1.60 range, and then did another $1.20, about 250, 260 total for the day. Big day. Lots of opportunity, and lots of opportunity to get run over a bit. But we opened right below a decision level here at 55.80, and notice that we just sliced through that like a hot knife through butter. We didn't pause at all. We just sliced through that. When you see them just cut through a decision level like that, that's a good clue that there's definitely other time frame, large money at play, and you pay attention. Also, the fact that we had an open drive, open type, and that's the fact that we just opened and boom, go. It's one of 5 different open types that we look for, and it's a very, very strong directional open type. Often leads to range extension, which we did. We ended up as a normal variation higher day, so that it's not quite as strong as a trend day, but it's pretty strong. We did find resistance at this 57.25 zone, and that was really the best opportunity today. Was the fact that they punched through this and immediately sold. That was opportunity back to the current day's developing value. You can see here, and then made another attempt, and that was it. I mean, that was basically the highest probability trades in crude today were there. We looked for a break to get all the way back down here to 56.45, maybe 56.30, and we just couldn't do that. Also, as the auction progressed, we actually migrated the point of control up, so that's value following price, which then says, hey, we're accepting these higher prices, likely still going to go higher. So as far as tomorrow goes, still expecting higher prices, likely not as much range, but want to be careful with gold or silver can really take off, or sorry, crude can really take off in war-like environment, and so just be mindful of that. It's fine if you step away from it, or if you don't want to trade the CL, trade the QM and slow the trade down. That's a great way to make it better. But now that we've clicked off this this level, so that decision level is now done. A key level tomorrow will be this 56.90 area. So that's going to be a key level for longs to defend. We do have single prints, or what we call poor structure, and we cleaned that trade up. So that's done. This naked point of control, we just gapped right over it. So that's still a valid level. Just now becomes a level to look for to the downside. And we cleaned one gap, but we left another one. So I'm now going to reference that gap area. And then similar in the S&Ps. I mean, you can see that the value for the last week is significantly lower, and so I mean, it's possible we could roll back through this. There's not a lot of inventory that we've traded, so be mindful of that. That's just more indications of a market that's really moving. Now the momentum obviously is higher, so I'm still expecting higher. We've got additional single prints and a naked POC up here at 58.28. So that's kind of the first decision level higher tomorrow. And then we'll see if that finds some sellers. Maybe we could find a movement back to 58 or 56.93, or if they attempt lower early and get back above, then we can move that way. So we'll kind of see, do they go for higher first? Might look to fade it, given where we are relative to near-term value. If they go lower first, then that's probably an opportunity to look to join the longs, and we'll go from there. And then as far as kind of a bias level, if we trade below 50, actually, you know what? If we kind of believing that the longs are in control unless we get below those single prints and trade through quite a bit of that range. And then last market that I want to look at is gold. Last night in Globex, gold started moving higher. Let's see, where did gold finish? Yep. Gold finished at 1393. So up here, that's a breakout, and they gapped and held. That's a breakout of a long-term bracket that's like 6 years long. That sets the stage that gold could actually start making a move towards 1470 area. Could even see this. This could be the canary in the coal mine in this whole deal of kind of where we're going. So definitely watching that. I think from a much longer perspective, there's an opportunity to be long gold. So if you don't want to trade the GC, do some spreads or some in the GLD. I think applied volatility is pretty high, so I think there's some credit opportunity that you could take advantage of. But yeah, definitely a big move there. All right, so that's kind of a recap of the day. A lot of movement and actually not a lot of stuff to do. I mean, it's one of the things that part of coming in every day is one, kind of having an idea for where the auction's likely to develop. That's kind of first. Second is where can I express a setup or a specific way that I can approach markets that has some positive expectancy within that narrative. And then sometimes that means long, sometimes it means short. We just don't know. Even if I believe the market's going higher, I may be looking to the short side just given the time frame that I'm looking to be active in. And one of the questions had to do with yesterday's FOMC trade. So I actually want to go back and look at the profile from yesterday. And see, let me think what's an easier way to see this. Let's look at it this way. So FOMC is what we call a binary event. Meaning, who knows? who knows what direction this thing is going to go? I don't know. You don't know. And nobody knows. It's a gamble. I typically take FOMC day off, but one of the things that I look for is a potential trade that I call a second move trade, and what that is where the auction moves one direction initially off after the event, the quote unquote release, and then goes back in another direction. We actually had a second move yesterday, and how that plays out is you can see early the move is lower, and then basically that makes new lows on the day. So this is a 30-minute. You can see they make new lows down here. They actually come down and kiss the weekly VWAP, volume weighted average price, and that turns on the machines. The machines bought this. They came back and traded above the high at 29.20. What was it? We'll maximize it this way. That way we can kind of see this. They come back above the opening range high. So opening range high is from here to here. So this is what you're watching after the release. The first move is lower. They come back above that, okay? And they come back that with good buying volume. So the rule is if they can continue to accept above this high, then that's a go with trade. And it's after the release. Now, this is not a trade that you would take, you'd have to have that second move in place after the press conference, which is why I actually didn't take a trade yesterday, because you had both the release and you had Powell's press conference. So all of this stuff is happening while Powell was talking. He talked for quite a bit before so I don't actually count the whole event over until here. So in that case, I was actually looking for, a temp higher that got back below this. I don't know if you can see this, but there is actually, see how the market just kept testing this area right here and just couldn't, it looked like it's trying to break it below that, couldn't. It's kind of 29.20, 4.5 area. that's a great level to kind of carry forward. That's what we call the scene of the crime in FOMC. And that was an area that I'd look to see if they, where they are at relative once they finish the discussion, and they were above that. And so that's the potential opportunity, is that if they get above that and fail back through this level, that would have been a great short. You could have defended the high, and we would have been looking for a gap close much lower. We just never got that. They never got back to the scene of where the initial buyers were, and even this bit of buyers that came in after the press conference was over, we never got through those again. And that's actually a behavior to always kind of monitor, is where they're buying spikes, where they're selling spikes, and do we trade back through those or not, or do they carry on, just to get some idea of where the turns are likely to take place. And I think Tony, you were asking about just understanding price action as it, so we talk about this a lot. We actually spend a week looking at behavior in the auction of how to have greater confidence when you're leaning on a trade, specifically in an entry, or how to know, hey, now it's time to step in. How do I step in and be active around this? One is to have an area where you're interested in being active. That's the first thing. But then once you get to that area, there's behavior that you're looking for. So let's just look at crude here real quick. We'll go over here because I have this on my. I have this level. And the 1 minute chart was actually makes it a little bit more distinct. So we had this 51.26 level that we were watching. That's a place I was looking for a potential fade. We'd gotten past the range of the day, and I was just looking for some sellers. Now here's the first thing, and this traps a lot of people. Is they'll see a market moving this way, and then they see some selling, and they go, oh yeah, it's turning, I need to sell, and then they get squeezed, right? And that happens often. So I always say, hey, when that first kind of pullback happens, just kind of watch that, see if they can get higher, and if do they break back through that? Well, then now we've trapped somebody that could give some momentum to the downside. Okay, and that actually happened later. First we got to the level that we were interested in. Got a deflection off of that. That's the first hint. Okay. Second hint is, see, we got up into that level, and immediately look at the behavior here. Actually notice that there's really strong buying that's taking place on the order flow here, and they don't get higher prices. They immediately sell. So two ways to look at order flow. One is that strong behavior should lead to higher prices if it's buying order flow. Strong selling should lead to lower prices if it's selling order flow. Like that you should get continuation. But how the profile can really help you is if you're on the extreme of the profile, like we're running out of inventory at those prices, and you see some impulsive behavior like that, that's often a place where somebody gets trapped. And that last aggressive buyer, in this case, becomes a very aggressive seller. And that gives you a great opportunity to take the counter trade. In that case, we were looking for a move back, to the 90s. Stop above the high. You could really enter anywhere in here, and as soon as you saw a break of that 1 minute bar, you're in. So you're looking at, I think at the open we were about 20 cents of risk, and you're looking for here, but really we were looking for 47, potentially 35 was really the targets that we were looking for, expecting some greater rotation. You can see, later we got closer to target 1. Not all the way there, but that from a price action behavior is what you want to see. You want to see the first move, great, and then you want to see another move and see them trap somebody and then roll back through that. Those are really effective. There's actually that second opportunity that came later in the day, again back into that level. Then notice all the selling volume that showed up. That's another. This is more initiating activity to get in. This is the trap. This is the second selling that took place, and that's the behavior to look for. So if you got like a volume subgraph, if you've got order flow, often what we're doing, and this is a good practice. Let me blow this up so you can see this a little bit better. When you're in those areas that you want to be active, and you see, okay, here was the buyer that got trapped, immediately saw selling counter that, right? Here was kind of weak and mediocre trade, can't make new highs, and then we see strong selling and strong volume initiating. That's another place to take a trade and defend the high. Those have high confidence of sticking because you've got other people there that add fuel to the trade. They typically come into profit pretty quick. Just the hard part is being patient for them. That's the tough part. And if even in all of this wiggle and stuff that's going on, this initial entry isn't wrong unless you take that high out. And so in terms of a stop, that's really the best place to initiate the stop, is where they shut that off. Because if they trade back through that, if they go right back through that, well, then they had enough momentum to overtake these sellers, and you should be out. But otherwise, you defend that. I had one question that showed up about determining trend early, and how do you look for trend. So depending on the platform that you have, one tool that we've found has been pretty effective, and I'll credit Brian Shannon over at Alpha Trends with this, is the use of VWAP as a tool. And even if you're just using like TOS or some kind of platform, it has a volume weighted average price. But a trending day, specifically if you isolate out, so if you just take out the overnight trade, okay, and you watch how the market opens, watch how that intraday VWAP, what is the slope of that, and do we come back and touch that? That'll kind of give you an indication of what type of day you're looking at. If we're spending time just trading back and forth across it, that's typically a pretty rotational day. But if we don't even touch it, that is a really strong directional day. And even though it seems like an extreme, typically what we find is that the algorithms will peg 2 standard deviations of the VWAP, which is what this blue envelope is. That's 2 standard deviations of the VWAP. On this chart, I actually have 2 different time frames of VWAP. I have the intraday session, which is the blue with the purple VWAP, and then you have the red, that's the weekly. Right? So where those converge, you can see just how strong this is that we didn't even touch the session, or weekly's down here, session is here, slope is definitely higher, the envelope is expanding. This is definitely impulsive trade. And another thing that you'll watch is they'll kind of hug, or if they exceed out, so like right here where those sellers came in, they also punched through that 2 standard deviation. The machines know that that's exceptional prices and typically reflect back. But if they can't close a longer time frame, like a 30-minute inside, they tend to come back and hug that. So right now that looks like 57 or 57.69, which is close to our next division level, 57.95, is pretty good good target higher in crude, as they come back and reconnect with VWAP, that 2 standard deviation on the way higher. So that's a way, and it works on all time frames. I have this on longer term charts, just to kind of see. These are VWAP envelopes. The dot here is the VWAP for the month, just to kind of see where you're at. Now, you look at a monthly chart, and you can just see how this is really extreme behavior that may actually hold crude for a little bit, as that tries to catch up, because it's not a moving average. It's a statistic anomaly, and the machines don't like statistic anomalies. All your quantitative guys don't like 2 standard deviation moves. They think that those are rare, and so they'll look to cover or fade and do stuff like that. But that's a great tool to use, to kind of know where you're at. And there's lots of different ways to look at it. Again, going back to this chart here, this is always updating throughout the day, showing me where the current day's VWAP is. So the fact that we traded back and forth across that in the ES just kind of told me that we were, it's kind of rotational day. Even though it looked kind of trendy, and it was trendy early on, we were just pressing away from VWAP, and then later in the day came back to it. So when you come back to it, you're like, oh yeah, we're not trending anymore, we're done. Okay, so that's FOMC trade. That's better understanding price action, some trend early things. I had one question around just making better trade decisions. I mean, I think one, having a better idea of what's typical auction behavior helps inform better trading decisions. The other thing that's helpful with trading decisions is having a playbook of trades, like categorize your trades and name each trade. All right, and what I mean by that is, for example, I just updated this. Let me pull up another window here. But this is just a log, a trade log, and these are trades that we've talked about as a community as demonstration. It's not all the trades I take, but it's trades I typically try to give people at least like a 15-minute heads up on. What was the day, what was the outcome, P&L, which product, long or short, what was the entry price, what time of day, how much did the trade go for you, how much did it go against you, where did you exit, and then specifically what was the setup. So all the trades I take, they have a name that are part of my playbook. And so one, I mean, you need to have like an anchor trade first before you start doing anything. That's typically one setup that you can execute and that you know how to look for. And outside of that, you can expand on that. So knowing the trades that you're looking for is really helpful in making better trade decisions, because you know the specific trade that you're looking for. If you're just looking for some type of trigger or some pattern, well, I mean, you're going to find lots of triggers, price action triggers and so forth. Is it according to the setup that you're looking for? That's the more meaningful thing. Okay, I think that covers all of the prior submitted questions. Looks like I got another question here. Nope, got it. That was just saying thanks, got it. Any other questions anybody have that you'd like for me to cover? Just real quick, we'll talk about expectations for tomorrow. Like for example, in the ES, so we did clean up these naked POCs, so those are no longer valid. This 2958 area will be a key level for all-time highs. I think we're looking at all-time highs. If we get trading kind of below 2950, then there's an opportunity for sellers to get a little bit more emboldened and start working our way back lower. We did clean the gap, so that's all good. There's a slight high volume area here. So it doesn't like that. There we go. As far as prices higher that are potential, so this is one of those situations where when you're at all-time highs, how do you pick decision levels higher is a challenge. And so at that point, I use Fibonacci numbers. That's about the only thing that I can use to give me some degree of expectation. So because we've it's new prices, we never traded those prices. We have no idea what's valid, what's not. In fact, that's 2960 that we had today. That was 100% extension from the ramp on the ECB announcement. So let's we're going to remove this, and we're going to actually do another one because we have another pullback that we could look for a potential extension. So from the base of this buying spike, FOMC, up to the high, and then the pullback. That gives us, I'm going to actually edit this because I want to see. Five 1.6. Don't need that one. Don't need that one. Don't need that one. Oh wait, maybe I do need that one. %. Oh, this one I'm gonna make one. Okay, so that gives us some levels to look at. So 2983 would be, 100% extension from the pullback today from the base of the spike at FOMC. And so 2965, that's all-time highs. So 2983 and 3000. Jiminy Christmas. So what did I say, 2983? So that's, and then was it 3000.8? 3008 and 3014. So we'll just say that there's from here to here. That's a short zone of interest. Now, again, expected range for the ES, because implied volatility is dropping, so we're actually expecting less ranges. So 30 points, 2960. Uh, 2960 would give us a potential, 2930 would be the expected range if the low is here, and we just go from 2957, 30 points actually gets us to that level. So that's a pretty good upside reference, assuming that the current overnight low is the overnight low. That could adjust and overlap. And if selling comes in, we've got some pretty cool targets back here. If we come back to this level and don't hold for whatever reason, that is likely really, really strong selling. And watch that it doesn't take us back to like the 28.98 area as well. But that's going to be that 2965 is going to be our new 5. This is still a good composite level to look for the downside. And that is the FOMC protection zone. So I'll just add this, save this, and then that's pretty much my homework. We'll see what they do overnight. All right, any questions? Anything I could do to help? That would be fantastic. My partner in crime, JP, is on vacation. He'll be back with us in a couple weeks. We'll do another one of these next week. Just some next steps. One, if you're still struggling to find consistency in markets and you're looking for a way and a process, give us a shot. Either set up a free call with us where we can kind of review your progress. I mean, I'd start there. Just like schedule a free call. You can go to the contact page on our website and schedule those. There's times available. You can pick those throughout the week. But see if our pathway is for you. it's very immersive, and you're going to get as much out of it as you put into it. If you're not ready to go there, make sure that you're following us on Twitter, and you can connect with us on Facebook. And again, if you have any questions or you can send us an email at team@tradersprofile.com, or you can give us a call or text at that number. And that's it. Thanks for sticking with us. We'll get working on getting this recording out to everybody, and hope everybody has a fantastic weekend, and congratulations on pending new highs in markets. Thanks for the questions, and we'll see you later.